Okay. Oops. All right. Let's begin. Hello, everybody. My name's Justin, Business Development Manager here at Fullerton Markets. And today I have a special class on Bollinger Bands as an indicator. All right. So, Bollinger Bands. I'm sure some of you guys have heard, have heard of this before, right? Bollinger Bands. I'm sure if you guys have ever seen any trading setups of other traders who like to use indicators, you might have seen the Bollinger Bands in action, all right? But for those of you who have never seen Bollinger Bands ever, well, let me show you what they look like. Yes, all right. So friends, this is the Bollinger Band, okay? Take a good moment to have a look at it, all right? So, what is so special about the Bollinger Band? Well, the Bollinger Band was created by John Bollinger many years ago. He is a very well-known trader, and at the same time, he created the Bollinger Bands because there was something he wanted to help people know, all right? And what he wanted them to know was overbought and oversold levels, all right? Now, what do we mean by overbought or oversold? All right, just from the two words, over and bought or oversold, meaning too many, all right? So when something is known as overbought, that means the people or the players in the market have been buying this certain currency, this certain commodity, and we are in an area where people have been buying it quite a lot, meaning there is a possibility for prices to start moving downwards or for prices to stop moving upwards, all right? When we say overbought, too many people have bought and now people might be looking to sell, all right? The same thing is true with the inverse. If something is oversold, it means people have been selling this certain currency or this certain commodity, and people might be looking for an entry to buy, all right? An entry, a possible area where they can enter a long position or a buy position, all right? Bollinger Bands tell us the oversold and the overbought levels, as well as having a moving average in the center, all right? So the top part represents the overbought, the bottom part represents the oversold, all right? We'll learn more about that in just a bit, all right? So Bollinger Bands are technical indicators defined by an SMA, a simple moving average, with two standard deviation bands, all right? So the upper band indicates when it's overbought, and the lower band indicates when it's oversold. All right, so looking at the chart, we are on the euro dollar on the weekly. All right, as you can see, there are three lines here. All right, the top, the middle, and the bottom. Okay, the top line or the top band. All right, this represents the overbought, or this tells you that prices have been people have been buying this price for quite a long time, have been buying this certain currency, this certain commodity, all right? So you have to watch out for these levels. And then underneath, we have the oversold levels, all right? These are indicators that will help you when you trade, all right? So to give you guys an idea of how you could possibly use this, all right? Imagine you already have a trading strategy, all right? You have a strategy that tells you when it's time to buy, when it's time to sell. What if, for example, you have a signal to buy, okay? But you're not entirely sure if prices will continue moving upwards anymore. If, for example, you are coming out of a, let's say, 10-day bull run, for example, a 10-day bull run. So over the past 10 days, prices have been climbing higher and higher and higher, all right? And let's say you've made quite a lot of money, buying each and every time there was perhaps a breakout. How sure are you that the prices will continue to move higher, okay? Well, using the Bollinger Bands, we can then more or less see if there is room for prices to move higher, or if people are already starting to feel that prices have moved high enough and we could possibly enter a short, all right? So if you have this information available, you might not want to enter your trade anymore. You might not want to enter your long position. You might actually want to look for a short position, Okay, so this is just an example of the application of the Bollinger Bands. All right, I have many more in store for you guys. All right, so how do we actually equip the Bollinger Bands on our MT4? Okay, there are two ways. All right, the first is by looking to the upper left. You'll see there a button, file view. Let's select insert. All right, select indicators, go to trend, and click the Bollinger Bands. All right, that's the first way. The second way to do this is by actually opening the navigator tab. All right, that's the one on the bottom right. Same thing, indicators, trend, Bollinger Bands. All right, and either way, you will come up to this. All right, so the standard that we use, all right, and a majority of the world uses is a period of 20, applied to close with 2 deviations. Now the color can be whatever color you want, all right? Personal preference. Okay, there are many ways for you to use the Bollinger Band, but this is the basic and the most well-known way to use Bollinger Band. So let's just use a period of 20 with 2 standard deviations, and we apply to close, all right? So there are 3 ways to trade with Bollinger Bands. The first is known as the Bollinger Squeeze, all right? Bollinger Squeeze is when the bands come close together, moving towards the moving average, all right? This indicates that there is a period of low volatility and the potential for increase in volatility, all right? Let me show you guys an example. You see this area here where we have drawn a box, right? As you can see, the upper and the lower bands are quite close to the MA, or the middle line, or the moving average, all right? So what does this tell us, all right? It tells us that there is not much movement in the market, all right? There's not a lot of volatility. The market is quiet, all right? The market is quiet. And my friends, if the market is quiet, what is the next possible scenario for the market? Well, the next possible scenario is for the market to become loud, or for there to be great volatility, all right? So how do we use this when we trade? How do we use this when we trade? If, for example, you are looking for a short position, all right? Coming from a Bollinger Squeeze scenario, all right? You could be waiting for drastic movement, all right? You could perhaps take the short position, and you might wait around and see if there will be any, loud movements, all right? When you squeeze something, right? When you squeeze objects, anything elastic really, if you imagine squeezing a rubber ball, right? It will be, it'll be close, it'll be slightly deformed, but once you let go, it pops back to its original shape. The same thing here. Since the market has been squeezing, prices, that the Bollinger Band has been squeezed, the moment prices start moving, it will pop out and there will be volatility, all right? So I'm sure you've noticed that Bollinger Bands aren't exactly strategies that you use to enter or exit a position. Rather, though they are very powerful on their own, right? They are very powerful on their own. They are even more powerful when you add them to certain trading strategies, all right? So whatever trading setup that you have, whether or not you're using Fibonacci, whether or not you're using MAs, you're using naked trading, you're relying on candlestick patterns, all right? If you use these, you could add the Bollinger Band to give you an idea of where the market could be or how the market could react within the next few candles, the next few days, all right? And then you can act accordingly, all right? So this is the Bollinger Squeeze. When the upper and lower bands move towards the center and things become quiet, it will be ranging for a while. And this is when you have to prepare yourself to look for any opportunities, because once this breaks, prices will move greatly, all right? And that is your opportunity to make money, all right? So this is the first way to trade the Bollinger Squeeze. The Bollinger Bands, all right, through the Bollinger Squeeze. All right, here is another example, all right, when the market is trending, all right? As you can see here on the left, this is what I mean by markets become a bit loud, all right? This is the squeeze. As you can see, the top band and the lower band are quite close to the MA, while over here, the upper band and the lower band are significantly, they're a bit further away. All right. So this is a period of great volatility here. After this period of volatility, we are followed by a period of low volatility. That is why the Bollinger Bands are quite close to the moving average at the center. Okay. So imagine perhaps entering a short position up here when you see that prices are oversold. All right. That's just an example. Let's move on. All right, this is the Bollinger Expansion, opposite of the Bollinger Squeeze. All right. Bollinger Expansion is when the bands move away from the moving average. This indicates a period of high volatility and a potential for decrease in volatility. All right. Or this is an area where you can possibly exit. Okay. So, all right, earlier we were talking about the squeeze. Now we're talking about the expansion. Okay. Once there is an expansion in the Bollinger Bands, all right, the next step would be the squeeze. Once again, it's just a cycle: squeeze, expand, all right. So if you are, all right, if you already have your position open, all right, you've managed to ride the expansion, you should be looking out for, you should be looking out for times when the Bollinger will start squeezing once again, all right, which of course follows an expansion. That is when you could possibly exit your position, all right? So the Bollinger Squeeze is a good opportunity for us to enter a position because we are ready, we are waiting for volatility in the market. While the Bollinger Expansion is telling us that, hey, prices have been moving for quite a while, there was a lot of volatility, we might be going back to quieter times, so maybe you should exit your trade. All right, you should close your positions. Or perhaps you might not want to take any positions as of now. All right. So those were the two ways. This is the third way. All right. As a breakout strategy. All right. One of the strategies to trade with Bollinger Bands is to take moments when low volatility increases to high volatility with a breakout strategy. All right. So whatever breakout strategy you have there, support and resistance, MAs, you can couple them with the Bollinger Bands, all right? So this is an example, all right? So from this period, as you can see here, this was a very short squeeze and another expansion, followed by squeeze, another expansion, squeeze, and another expansion, all right? So, ladies and gentlemen, that is it for me. My name is Justin, Business Development Manager here at Fullerton Markets. I hope you guys enjoyed our class, and I look forward to seeing you all in our other classes. Thank you all, and goodbye.